Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, September 5th. Hope you guys have a great morning so far. We got a lot of economic data to go over today, so let's jump right into it. Excuse me. We'll start off with ADP employment. We normally would receive this on a Wednesday, but because of the holiday on Monday, it was moved over to Thursday. So this kind of gauges ADP gauges the private sector jobs, and then tomorrow, of course, we'll have the big one from the Bureau of Labor Statistics that will be released, and that will be the big one. So July's numbers actually was revised 14,000 lower, so it came in at instead of 156, it came in at 142. And then for August, it came in 195,000, so it came in pretty hot right there. So market's definitely liking that. Jobless claims the previous week came in at 216,000 people applying for our first time benefits. Forecast is supposed to be in that range at 214, and it came in slightly higher at 217. So still good numbers here overall. We're still getting very good numbers in terms of jobless claims. We had the sample week, so they are expecting a pretty strong jobs report tomorrow, but not quite 200,000. They were forecast, I think, closer right around the 150 range. But if it does come in hot, watch out. Let's move on here. We got productivity for second quarter. So the initial reading for Q2 came in at 2.3%. Uh, Forecast 2.3, and it came in at 2.3. This is on the heels of a 3.1% Q1 productivity. So Q1 was at 3.1, and it dipped down to 2.3 in the second quarter. Unit labor costs. Previous reporting came in at 2.4%. Forecast is calling for 2.4, and it went up a little bit to 2.6%. So let's jump to the next page here. Market services. We got two services indexes here. Market services PMI. This is a survey done by the large 400 companies in the U.S. Anything above 50 on these are considered expansion. Anything below is contraction. So as you can see, they're on the verge of contraction. So in July, it was at 50.9, and it had a slight dip to 50.7. However, this is kind of a wider range of it. This is kind of more closely look at is the ISM manufacturing or services for the month of August. So July was at 53.7. Forecast is calling for 54.2, and it went up even further to 56.4%. So ISM actually went the opposite course, and it's a little bit more viewed report out there by economists. Last but not least, we got factory orders for the month of July. So as you can see, it had a pretty big uptick here from June. So we had a 0.6% increase in June. July was calling for doubling that up at 1.2, and then slightly more than double at 1.4% for factory orders. So we had a pretty bullish, for the most part, pretty bullish data here on the calendar here. And stock markets are way up so far this morning. They're up, I believe the Dow is up over 400 so far this morning. Not only are the strong data, but it came out that China announced and the U.S. confirmed it that uh, they plan to be meeting in, I think it's October 4th for the officials, and I believe they're coming over to Washington. So the officials from China will be coming over to Washington. Meanwhile, they're going to have their lower level um, negotiators get together and talk and try to lay some groundwork to try to close the gap that we've been kind of seeing here. So of course, stock market is you know not we've been seeing this back and forth, meet and then stop. So anytime they meet, stock market gets excited. So, but again, we've been it's kind of been a broken record. Let's move ahead, see how this affecting the bond market. Bond market is not liking it. Well, it's not like it because what's happened is money is flowing into the stock market. So the reason why stock market is up so high is it's money flowing from the bond market, which is a safe haven, into the equity market. So they're taking more risks. As a result, we're down about 45 basis points, breaking below this floor support. We got the next floor support, which will be the 25-day moving average. So yes, our pricing did definitely worsen from yesterday's pricing. So be alert if jobs come in pretty high again tomorrow. This could break further down, so just be cautious. Long term, I do see us improving in rates, but again, like we've said all along, that these do not go up in a straight pattern. They do go. They have their ebbs where it flows up and down a little bit, but gradually go upwards. But in the meantime, it looks like we're taking a little bit of a break, so to speak, and dropping a little bit. So just be cautious here, and especially ahead of jobs report tomorrow, that could be strong. They had a pretty good sample number. They had the sample number of these for the weekly jobs claims was 211,000, and so that kind of shows a strong jobs report coming ahead. All right, so this is yields. Yields are way up. It spiked above its floor of support, which it broke just a few days ago. It didn't obviously hold. It's approaching fast on the next ceiling of resistance. It's approaching 1.59 right now. It's like 1.589, so it's about one to round up. It's like we'll say 1.59 at the moment here. So again, we'll see how this works. We had, as you can see, a stochastic. It did have a crossover, so that's what's kind of changing the direction of the markets here, and what we're seeing here. So this will show a sign that yes, we are going in that position, and we'll start trending this for a little bit. So just be cautious, and if you guys are in a transaction that are floating, probably want to lock in now. All right, you guys have a great rest of your day. Thanks so much for watching. I'll catch you guys tomorrow. Bye bye.